Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host Jill Malandrino, global markets reporter at Nasdaq. We've been coming to you live from the Nasdaq PHLX options trading floor. Joining me for this segment, we have Chris Englebert. He's the managing director over at Beirne Wealth Consulting for our monthly registered investment advisor update. Usually we're at Markets Night in New York. Now we're here back. We're all starting.
Yes, we are.
So we celebrated our 1-year anniversary in August.
Yep.
Shot here for the first time August 2017. And funny how things come full circle because the market looks very different now than it did when we first got together.
Sure does, Jill. Obviously 2017 was characterized by extremely low volatility, almost unheard of, actually historically unheard of. 2018, we're seeing more normal volatility, and we actually think at 2019, you can see the pendulum swing to even more volatility, which investors are just not used to.
Right, but you think that diversified portfolios, they could do well in 2019 for that reason.
Yeah, finally, we're getting much more positive because if you look at it across all asset classes this year, literally over 90% of the asset classes have had negative returns. Very, very unusual. If you look at it from a value standpoint, many of the asset classes are at prices that are really beginning to have investors look and be interested in investing in them.
Right, it's almost the inverse of 2017 where everything was going up and I mean, there's really nothing you could do but be invested in these portfolios. But it also goes back to stock picking is what you think it's going to revert to in 2019.
Yeah, we think 2019 is going to be the year of the stock picker finally. So the index funds and all the money that's been indexed is literally the tide has lifted all boats. So what ends up happening is that when the tide's going out, we actually think the active stock picker is going to do very well in 2019. And I can make a case that investors really have to be looking at strategies similar to long-short managers. You're going to find a lot of very undervalued companies out there, but again, even with this recent market decline, there are many companies that are still overvalued as well. So we think that strategy will become very important in 2019.
How do you manage your clients in a market like this? I'm sure the phones are ringing off the hook. Not only are you worrying about year-end charitable giving and tax savings and all that kind of stuff,
right.
Now you have to handhold through this as well.
Yeah, it's the old adage, communication. So obviously a video like this we send out to clients. I have an app, we do an email, we update people, and we're trying to let them know that this is going to be much different than it has been the last couple of years, and that one of the things that, and again, not to pick on the media,
right.
But the media is really trying to, have people say, hey, gee, the market's up 500 points, or the market's down 500 points, and many times what you want to do is just not do anything.
Right, and I happen to agree with you on that, and that's why I like the flavor of this show. It doesn't necessarily matter what happens in the next 5 minutes, but how you think long-term.
Correct.
Taking that long-term approach for investors. Now, in order to take that approach, you have to hire the right people within your firm to help manage these client accounts. Give us some tips there for registered investment advisors as they're looking to grow their teams.
Yeah, so what's happening around this time of year is many RIA firms are sitting there going, okay, how do we grow in 2019? Who do we hire, et cetera? And what we're trying to make sure that people understand is that when you hire somebody for your firm, they literally should be able to do multi-tasks. They should be able to interface with clients. They should be able to examine a portfolio. They should be able to work with the client service team, et cetera. So anybody that's looking to get in or join an RIA firm, the more skills you have, the more we like to hire you, because what ends up happening many times is an RIA will have a very specific, we need somebody to do client service, so they hire somebody from client service. Then later on they need somebody for IT, and they hire somebody for IT, and sooner all of a sudden they're very top heavy with too many people that they can't or they didn't cross train, which is obviously very important.
Well, that's also the big trend of outsourcing as well.
Yes.
So you can focus on what you're supposed to do, which is investing and managing your client funds, and not have to deal with the back office and marketing and legal, outsourcing for the experts that do this all day long.
Yeah, and we think that's a trend that's going to continue. So this time of year, we also tell RIAs they should be looking at all of their vendors. Who's your IT vendor? Who's your compliance vendor? Those people like that. You work with them. So on the compliance side, you obviously can't outsource. You still are, as an RIA firm, responsible for your compliance, but you can work with these outsourced compliance firms and then obviously handle your compliance. But there's a lot of different parts out there that have developed recently in the last 5 years that you can go to these vendors and say, okay, we have this particular need, and it becomes a make or buy decision. So, for example, I find billing very interesting. We've called RIA,
really?
Yes. When I say interesting, we've called other RIA firms and we talk to their billing department, and they have 3 or 4 people that are doing nothing but billing. Well, the question is, with a lot of the software that's out there, why aren't they outsourcing their billing so that they can be more accurate, more timely, and obviously save money in the long run?
All right. And part of it too is also understanding the industry when you attract new talent.
Correct. Yeah, many of the vendors out there, TD, Fidelity, Schwab, they produce really good white papers on how much the average client service assistant is making, how much the average advisor is making, so that when you're an RIA firm and you're going out and looking to hire people, you've got to be right there in the pay scale. I mean, obviously the labor market's very tight right now, but and these people have a very unique set of skills sometimes, but you got to pay people what they're worth, otherwise you're not going to attract them to your firm.
All right, let's take a look at the charts. We're going to kick it off with the S&P 500. Now, you sent this to me on the overnight,
yeah.
And even just the small slice of half of a session that we have today it's very indicative of that choppy action that we've seen over the past month.
No question about it. I mean, we've literally seen investor sentiment go from extremely bullish to extremely bearish in a matter of about 30 days. So from the high, intraday high, to the intraday cash low, which obviously today looks like we're taking out that intraday cash low, it's been over a 17% reversal in the market. Now, I think what a lot of people get upset about is the speed of the decline. You know, it literally is an escalator up and an elevator down. But again, this goes back to volatility. We haven't had this kind of volatility for a couple of years, and people really don't know what to expect with it.
Right. Well, that's the thing. People need to not confuse volatility and selling.
Correct.
They are two different things at some point, but I think you also have to recognize too, this time of year, particularly next week, it could be more volatile. Moves are going to be exasperated because of a vacuum of volume for the most part. And I think if we take a look at the Nasdaq composite chart, it's kind of telling the same story.
Yeah, obviously this was a story we talked about last month. Money seemed to be coming out of the FANGs, but I mean, some of these FANG stocks have been compressed so dramatically that you could see some type of bounce. So obviously a big shout out to Dorsey Wright. We're big Dorsey Wright fans. We've been following him for almost 20 years now. And in the overnight session, some of the Dorsey Wright indicators have reached levels that we've seen in March of 2009. So I'm not saying that the bottom may be in or the low may be in, but we're getting some pretty washed out sentiment numbers and also obviously technical numbers too.
And that's when you start to look at the tactical model portfolios.
Correct.
When you get to those levels.
Yeah, absolutely. So we run a tactical portfolio. 2 weeks ago, our tactical portfolio, which had been all in fixed income, got 25% in the market. Right. Then this week, it got another 25% in. Again, when these risk indicators get that washed out and risk is out of the market, it may be tough to step up and buy, but it's telling you risk is much lower. The risk profile of the markets are much lower than they were even 30 to 45 days ago.
All right, let's take a look at the Russell 2000. Now, this particular index is an animal of its own just because of the companies that make up this index. Rising interest rates, that's got to be a concern for a lot of these companies who can't service their debt. That was at 0%.
Right. It's almost a tale of two different markets. Right. So the first half of the year looked like tax cuts were really going to help the Russell. It had a really nice rally. Now, obviously, most recently, probably because of liquidity, et cetera, the Russell has given back. We put up a 2-year chart. It's given back 2 years worth of gains is what ended up happening. So again, a broad brush is being painted for all these small and mid-cap stocks, but there's a lot of diamonds out there that really needed to be picked through and not just wholesale sold down like what's been happening with the Russell.
That's good with the Russell index too, especially when you look at stock picking for 2019. You can find some of those diamonds in that index. Yeah, for sure. All right, crude. Yeah. That's a very different story from the end of the last quarter to this one as well. Yeah, same thing, same chart pattern, extreme sell-off, literally in the short term. We've seen crude come down. It looked like it was going to hold the 50 level, bounce trading range back and forth. It's now, again, if you look at longer-term technical pictures, the first breakouts were in the mid-40s level. It's kind of trading back around the mid-40 level there. The good news is with the crude coming back as harsh as it has, the consumer's getting a tax break as far as gasoline goes. So there's a silver lining there, but again, we think for 2019, you're going to continue to see volatility, not only in equity markets, but also in the commodity markets as well. Because global growth demand, it's just, there's a big uncertainty out there right now, especially now. Exactly. So what's happening right now is you're seeing major sectors of the economy, the autos, the banks, and the home builders be priced like we're having a hard 2008 type of recession. Although we believe, like some of the other pundits, that there's a slowdown coming, the question is how deep is that slowdown going to be, and has it already been priced into some of these sectors? All right, and let's wrap it up with the 10-year. Yeah, the 10-year, like we said last month, it seems to be the bellwether as far as 3% goes. So if the 10-year is over 3%, looks like the economy is good and it's growing. Obviously, the 10-year is below 3%. Interesting note, this is only the fourth time in 4
40 years that the aggregate has had a negative return year. If you look at all the other 3 times it happens, the last couple of years for bond investors has been pretty good, and it looks like 2019 could finally be a safe haven for some bond investors to go into.
All right, well, it'll be interesting to see where you are 1 year from now. Next, and it'll go by quick too.
Yes.
I bet you that. Thank you so much. Thank you for everything over
Yes,
2018.
thank you.
And thank you for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.